The more dominoes that fall, the more people will become aware and scared and will do whatever they need to personally protect what assets they have in the bank, which means there's going to be more and more withdrawals throughout the system.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan from the Morgan Report, the Silver Guru. David, thank you so much for joining us today.
Elijah, it's always fun to be with you. Thank you.
Well, it's great to have you today, especially in these exciting times and somewhat distressing for a lot of people. I think a lot of the American people here have been shocked over the last couple weeks as we've seen 3 bank failures, other banks having issues, First Republic having issues. Across the pond, we see Credit Suisse as well as Deutsche Bank having issues now, Credit Suisse being taken over, obviously, by UBS. What is your take regarding the current situation in the banking sector?
Well, my assessment is it's not over, and the amount of leverage in the system is starting to manifest, which means that there's more on the way. I don't want to panic anyone, but the currency crisis that I've long talked about, the banking system failures that I've long talked about, is basically there. I mean, my main mantra for the last several months has been that the Federal Reserve is going to continue to increase interest rates until something breaks. Well, it looks like a lot of those 3 banks have broken. And again, I don't think it's over. So has the whole system broken? Don't know. In a way, I think it has. I do not think we'll have the same financial structure 5 years from now we have right now. It maybe even be next year. I don't know. But and the bankers are aware of all the fact that all fiat fails, and they're mitigating it to their liking. That's, of course, central bank digital currencies, and it's going to be implemented. It's already in China, basically, and it's in other countries. I think there's 92 countries that are looking at central bank digital currencies. And, of course, in the United States of America, we have implemented the new system on a trial basis or beta test on November of last year, and full implementation of the Fed Now program will take place in July. So the powers that be, the money elite, they're not unaware of what's happening. Is this orchestrated or not? I really don't have a comment because I don't know. I know it's inevitable that this would take place, and here we are.
Now, where it goes from here, I mean, there are a whole lot of concerns that people have. People who have any money in the bank are concerned right now. And also those who have over 250,000, the FDIC limit. Your perspective on that whole controversy? I know there was an exchange with Yellen and another representative, and it was so interesting because it really woke people up to saying, well, if my money is in the small banks, then will my funds be protected over 250,000? Because it seems like if it's in a big bank, that's too big to fail, it'll crash the whole system. So obviously the government will backstop those deposits, but what about in the small banks? So there's this whole controversy about that. I think part of it may be missing the big picture of what you're saying is this could be the death of the currency. And even if your currency is insured, what does it really mean if the currency is worthless at the end of the day?
Right. Well, I think first of all, they're not obeying their own rules. I mean, one of the most popular interviews I gave was with Stansberry Research. It got like 2 million views. It had all to do with the new rules, meaning the Dodd-Frank bill, that there's no such thing as a bailout anymore. Well, they've broken that rule, the Federal Reserve, because they did some non-bailout bailouts. I mean, those are the words they use, non-bailout bailout. What the heck does that mean? And they're inconsistent. If all accounts over 250,000, you're an unsecured creditor and that money goes to money heaven. except no, it doesn't, because we've just intervened and changed the rule. So that promotes more fear, because if people don't know what the rules are, they're changing the rules as we go and making stuff up. That adds to the already uncertainty that people are feeling, the anxiety they're feeling about it. So we talked about it, I think, once before, and it's very basic. It's called the ownership theory of money. And the ownership theory of money, of course, is perfect in a mono or a bimetallic standard. I mean, you own so many, coins. That's yours. You can touch it. Now, you might deposit it, but you own it. And in our world of the gold silver world, we always talk about if you don't hold it, you don't own it. You should have it in your own possession. But if you think about a bank and paper money, it's actually very similar from the aspect that you put it in a depository, supposedly. But a bank deposit is not very secure. You can look at several examples, but if you look at Cyprus, basically they were bailed in, and then you become, as an unsecured creditor of the bank, you got a stock certificate. And basically that happened a few places. And the general rule was you got about 5 cents on the dollar. So you're getting 5% of what your deposit was. You go to Argentina in the 2000s, and of course, Argentina has one of these problems about every decade. Your money stayed in the bank, your deposit was secure, but you were only able to withdraw something like 250 pesos per week. So you might have $1 million and your mortgage might be 3,500, but if you can only get out 250 a week, you can't even pay your mortgage. This is the kind of things that go on in the banking system most people aren't aware of. So I think the safest thing to do is to mitigate your exposure, especially if you're over 250,000. And so am I adding to the bank rent? Well, maybe I am. It comes back to the ownership theory of money. If you own it, you ought to be able to touch it. And does that mean physical cash? It could. I think that's going to be very difficult. The banks are very resistant to large cash withdrawals, but you can move it by check or wire into the precious metals, as an example. You can also go to T-bills, Treasury bills of short duration. Those are about as safe as it's going to be. The last place that the Federal Reserve and the Treasury are going to not pay would be on a short duration basis. The long bond, of course, is in trouble. Most of these banks' assets are either in secured mortgages or long-term bonds, which means that if you had to put them mark to market, cover a cash withdrawal, which was happening in SVB, then you've got to discount the bond and you've lost money. You've lost principal. So if you're getting $1,000 bond and it's worth 700 and you have to sell it at the current market conditions of 700, you just lost 30%. And you had to get the 30% because you couldn't give your depositor a bond. You had to give your depositor cash. So you have to convert that bond into cash. So that's the conundrum with the banking system. And borrowing short, lending long works as long as there isn't a demand on the deposits. But there is, and it will continue, because the more dominoes that fall, the more people will become aware and scared and will do whatever they need to personally protect what assets they have in the bank, which means there's going to be more and more withdrawals throughout the system. And then you get into so many other dynamics that I don't think too many talk about. The derivatives market. I mean, many insurance companies took bets on interest rates. Most of the derivatives are foreign exchange or interest rate bets. So if you go back several years and you look at like 2% interest rate, which is very low, there were insurance companies that took derivatives and said, well, that's as low as it's going to get. And we need to make about 7% to make our policyholders whole. And we know that interest rates are going to go up. And therefore, they make a bet that the interest rates are as low as they're going to get at 2%, except then they go to 1.5 and then 1. And then they get to 0. And so they're losing money on that bet. Somebody on the other side is winning the bet, but they haven't collected yet. But these banks, insurance company, pension funds, large hedge funds, money markets, all that, when they make these bets, they usually insure the bet, sort of like in the movie The Big Short. So remember when Dr. Burry said, I need insurance that if you guys go down, I'm still going to get paid. Remember that part? So it's the same thing in a lot of these derivatives. They go to an insurance broker and say, I want to be sure that I get paid. Well, that's all well and good, except there's no guarantees in life, and especially in this leverage of financial system that insurer really cannot insure the systemic collapse. And that's actually what happened in 2008. AIG was the insurer of a lot of these derivative contracts, and they had to be rescued. But this time, I don't think the Fed, I don't think the International Bank of International Settlements can rescue the system if it continues at the rates that we're already witnessing. So, and you might be able to, press a button and put all the digits bank in the banking system, but you've lost so much confidence in the system that that may just be an effort that really doesn't manifest any confidence in the system, and that's what the whole system is based on: trust and confidence. So we're in very interesting times, and my favorite word, we will get through it. It may be mitigated. It will be at some point. What the transition is going to look like, I think, is the most interesting to think about. Like, when or how will they implement a central bank digital currency when we're getting pushback already? I mean, there's states already that think they don't want it. We're not going to allow central bank digital currency. It's something we didn't talk about pre-show. We talked about a few things, and I meant to convey was states' rights. We're seeing a lot of shift into states' rights. If you look at the Bill of Rights, the 10th Amendment is basically all about states' rights. And I think this is what you're going to see more and more, Elijah, because we have, and I don't know how many there are, somewhere around 14 states in the union that basically allow gold and silver to be used between any two parties that agree. So it could be at a gas station, it could be at a Walmart, it could be at a grocery store, it could be a farmer, it could be a laborer, it could be whatever. And this is a way out. I mean, you could basically say, no, I don't want the CBDC. I'm in Utah, and I can spend my silver as I see fit. And people say, well, David, you're an idealist, and that really isn't, maybe on the books, but, it's impractical. I mean, we're going to give silver coins, and how you, believe me, in a crisis situation, people adapt really quickly. And it wouldn't take more than probably a month or less for people to actually start transacting it and figuring out, okay, I'll take slugs and change. I want 22 dimes, but I want change. So give me, 10 copper quarters, and we'll call it a fair transaction. Or get a chit. All right, I overpaid you. You owe me 2 hours of labor, or whatever. But people adapt when they have to. I mean, the reason I know this is Argentina is one example among many. So people learn how to survive. The other thing is, there's alternatives that most people don't talk about. We do on your channel. I mean, one of these gold backs. I mean, that is gold in, polymer protection. And that's physical gold in physical reality that has value and always will, that I can use in a transaction. So whether or not we're going to gold or silver standard, of course we're not. And whether or not the new system implements it or not, to my mind, is to be determined. There's some advocating that it's inevitable and it's already in the books and all this stuff. I'm not convinced yet personally. But regardless, it will be a transition for some people, and it will catch fire in areas that aren't even thinking about it now. And of course, it is outlawed in these states. Really, to me, the states don't really have to do what they're doing. It's not bad that they do, but it's really on the books, so to speak, as Ron Paul used to say in front of Bernanke, that, it's already on the books. I mean, you're already allowed to use gold and silver in the country as legal tender if it's minted by the Treasury. So I kind of went on a tangent, but I think there's going to be more resistance to it. I mean, if this fiat system failed, and now they take all the currency and take out all the ATMs and have you on a digital basis only, how many people are going to jump up and down for joy that that's the new system? The one that we have isn't working. Let's make it more diabolical and put a smile on everyone's faces.
Now, mentioning precious metals, we're obviously already seeing a move into them since this banking crisis started. Your perspective on that? We've seen quite an increase in the prices. Gold is touching 2,000 right now. Silver around 23, 24. Your perspective also on the physical demand we've been seeing. It's really unprecedented. And do you see this continuing, or do you see maybe there's been a couple weeks of rush into metals and it'll die off soon before we see a major rush again?
Well, we'll ebb and flow. And as you know, Elijah, I probably was the first that said the run to gold has already started. And I think I've been vindicated because of what the World Gold Council talked about. The amount of gold that was purchased in 2022 basically hit a record high over the last several years. And because of that fact, that kind of, again, vindicates what I said. So the banking system has gold for a reason, although they don't talk about it publicly. But it's the money of last resort, and it's a way to re-liquefy the system. All I have to do is mark the value up in terms of prices, and then they could mitigate a lot of the losses that they have in other asset classes. So that exists. I think that we will see a surge, or we are seeing a surge. I think it will quell somewhat, and then I think it'll really go. I mean, the adage, there's no fever like gold fever, is there for a reason. And when the banks want it or need it, and the public wants it or needs it or sees it as a safe haven, get out of the banking system. I mean, hypothetically, let's take someone that has 500,000 in the bank. So they feel safe with the 250, but the other 250 they're concerned about. And since we don't know what the rules are, because they change constantly and seem to change with the wind direction, you better take some action on your own. So what do? Well, you could go to the window and say, hey, I need 250,000 in cash, and then be laughed off, because there's no way that any bank is going to give you. I mean, there may be some, but it's almost impossible to get that kind of currency. So you wire the money to XY, to Miles Franklin as an example, and you buy 250,000 in precious metals, and you send it to your office. So that's happening, as you know, and it's happening more and more, and it will continue. Technically, once gold breaks through the old high, which is, I'm not sure the number, 2078, I was told on a Spaces call yesterday. Once we're there and we break that new high and we stay there for a little bit, the algorithms will kick in. So all the computer and the quants that program these things know what a momentum trade looks like. And when there's no upward resistance, there's nothing preventing or wanting to sell because they hold $3,000 gold and they can hardly wait for it to get back to 3,000 because they'll break even. That doesn't exist. Everyone that owns gold at $2,100 US terms is in a profit. Maybe a small one if they bought it at 2,078, but still a profit. So they'll hold and wait and see how high it goes. So it goes up. So any little buying will move the market higher and higher and higher. And that's how you get these parabolic moves. But if you get a parabolic move, as I'm describing, and a currency crisis at the same time, and banking inconsistencies at the same time, and more fear and distrust at the same time, you can see that there's no fever like gold fever, and the run to gold could accelerate. And that's what I expect.
So you mentioned how obviously the demand ebbs and flows, and it seems like we have seen quite a run here. So maybe we'll see a bit of a pullback before that final blow off top there. But your perspective, I wanted to get into more risks in the system right now. We were talking before the interview as well, kind of the foreign demand for dollars may be impacted by the sanctions that we obviously saw with Russia in Ukraine. Essentially just turning off their accounts. And it seems like obviously there were reasons for that and good reasons for that, but that also threatens the faith that other countries have in US dollar holdings. Your perspective on that?
So there's always foreign exchange risk. I mean, this is, when you are mining in New Mexico and you're a Canadian company, what's the exchange rate between the Mexican peso and the Canadian dollar? And you've got to hedge it, another derivative. And so that exists in a normal market. On top of that, there's many countries that owe US dollars on their debt. They can't pay it off in their local currency. So what do? Well, they can print more of their currency and try to exchange it. Or, and in some cases, you need to do what's called swaps or swap line, which means that the Fed will come in and say, okay, we'll take your Argentine pesos, we'll give you US dollars, and here's the terms. So that is a greater risk, especially since you got to offset it in the derivatives market. And then on top of that, you have the greater risk, which is Argentina or Ukraine or anyone really, foreign exchange, might ask themselves this question. Well, the United States banking system basically took the deposits of Russia and sterilized them and didn't allow them to use their own funds to pay debts, even though it was in US dollar terms. What if they do that to me? And that thought's out there. So I think that was a huge mistake. I mean, sanctions where you don't export, you don't import or whatever. Yeah, okay. That's gone on for a long time, called the Smoot-Hartley Act in the 30s. But to take the reserve currency of the world and said, your account is invalid, that to me was verboten. You should have never done that. Yeah, you might have a valid reason to do it, but in the monetary sphere, that really, from a top-down perspective, is very scary. Because if the U.S. could cut off the Russian account, why wouldn't they cut off some other account? And that's something that also pushes nation states to look at gold, because gold is inert, worldwide money for 5,000 years, and the ability of a banking system, or a nation state, I should say, or a banking system, to make it null and void doesn't exist. So there's a lot of factors lining up in favor of hard assets. And it doesn't have to be gold. I mean, it could be real estate, it can be food, it can be, oil, it could be anything in the commodity sector that's real and you have access to it. And I think we're going to see more and more readjustments in the system. And a lot of ownerships will change. Things that are over leveraged will die. And people that have cash will be able to buy. And so if you're not leveraged, or your bank is particularly solvent, you might be able to pick up things like leveraged debt, like real estate as an example. Maybe another example would be a used car dealer. They're highly leveraged. They're based on credit, and the credit goes away. So the only way to get out from under the debt is to sell it at a discount it down to somebody that can buy it from. There's a lot that's going to happen in deflationary terms going.
So it seems like around the world we're seeing a move towards gold because, one, there's a distrust in the US dollar because of the sanctions, and also here in the US because of the banking crisis. The American people are distrusting their money in the banks, and they want something of real value outside of the system. What are some things that you think, before we let you go, that people should be paying attention to right now, given the current risks in the banking system? What are you paying attention to right now?
Well, I think the best, suggestion I can make is take a deep breath and don't hit the panic button, but also be aware of what's happening and see what you need to do personally to mitigate it. And that means, those are personal decisions. If you're over 250, as we discussed, I think you got to take a hard look at that and look at alternatives. I think your situation with your banker, you might want to phone them up or whatever and ask them, although I'm not sure I trust the answer I received. So I think just to take a look at where you are at. I mean, if you're someone that has a credit union, or you're in a money market, and the money market's primarily in the repro market, the overnight market, where you loan funds overnight and get a yield. I mean, most of those are going to be okay to save for a while. But it's hard to predict something that, once you get sort of a chain reaction and the fear continues to increase, what the outcome will be. But if you're holding a hard asset like precious metals, you can kind of observe it without having to be too concerned about it. Obviously, it'll affect the markets, and it'll affect the attitudes of people, and it'll affect a lot of things. But you can mitigate it by taking that kind of action. Some people can't do that. I just got a email from someone says, "Oh, you probably won't answer my email. I'm on Social Security only. What do I do?" I said, "Well, I would suggest, when food's on sale, buy extra food. Certainly live within your means. Look at what your personal abilities are. Maybe do something that can bring in extra income, like cat sitting, house sitting, dog sitting, or whatever. And realize that there's more to life than money. You are a priceless human being. I trust this helps." And I sent it back to her. So there's, this has been happening or coming for a long time. Myself personally, and many like me, as you well know, Elijah, have been talking about this and doing podcasts and writing books and doing interviews and going to investment conferences. And, we're kind of a bit of the black sheep because the mainstream is like, well, that'll never happen. Or if it does happen, it's, 5 lifetimes away, et cetera, et cetera. And yet it's right here, right now. So again, don't panic. And I think the last thing is, will this be the Great Depression or not remains to be determined. Maybe it's just going to be a real bad recession. I think those terms are misused, but people get through it. They get through it. And from a spiritual perspective, I think it's a bit of a cleansing that needs to be accomplished. And what I mean by that is I think in the West especially, and perhaps the U.S. more than any other place, we put too much emphasis on material wealth rather than wealth from our head and our hearts. The real wealth comes from what we are as beings, as people, as humans, and what our human experience is based on how we interact with others and not how many things we can own. So I think that will put a perspective after we get through this, or as we're coming through this, that puts a value system in place that may be more in line with the way nature really works or God really works. And I actually believe that's necessary.
Definitely. Well, thank you so much for your insights and wisdom today, David. Where can our viewers find you online if they're interested in learning more?
The best place is themorganreport.com, and go to the blog tab. And I've got Twitter feed, Instagram, YouTube, several channels, or not one channel on each of those. Twitter's where I'm the most active, but just going to the blog will save you a lot of time. And I also do a update from a more spiritual perspective for David Habner TV, where I look at the money system more from a Christian perspective. And so I'm on there as well.
Fantastic. David, once again, thank you so much for your time, and God bless.
Thank you.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.